So let's get this deal underway. We have a panel coming up here, and to introduce that panel, we have Howard Altshuler, thank you, with our friends at Weaver. So welcome, Howard.
Good morning, everyone. As Brandon said, I'm Howard Altshuler. I am an audit partner with Weaver and a leader of our real estate and construction practice. If you look on your chairs, we have a flyer on there, and it's a two-pager talking about our real estate and construction practice. Feel free to take it home, make about 1,000 copies, pass it out to all your friends, and help spread the word. I'm really proud that Weaver's been a longstanding sponsor of the forecast. For those of you who aren't familiar with us and haven't yet read the flyer on your chair, we're a national CPA firm with roots in Fort Worth. We're founded right here 74 years ago, so be on the lookout next year for our 75th anniversary celebrations. This looks like just a great event here. Good to see a nice crowd, a lot of people out in the lobby talking beforehand, so always a fun networking event. Like James said earlier, we're changing things up a bit. I can't help but wonder if it has anything to do with last year. We had a lot of the speakers here, and it seemed like everybody got it wrong. The market did not react like everybody was expecting it to, so it'll be interesting to hear what everybody has to say this year. We brought back some of our favorite market experts that you've seen before. Reed Getz with Hillwood, Drew Kyle with Institutional Property Advisors, Scott Bennett with the Beck Group, and Cannon Camp with JLL. We also have a new face this year, Mark Massenter with OpenRA. He's going to be joining us to talk about retail. Holding it all together is the one and only Jessica Miller-Essel with M2G, who's going to serve as our moderator. Please turn your attention now to our amazing panelists as we talk about doing the deal in Tarrant County.
Morning, everybody. Jessica Miller-Essel, I'll be serving as your moderator or general hype man for these excellent fellows on the stage with me here. But seriously, we're really excited today. Not only are these guys experts in their field, but they're also friends and colleagues, and to get kind of their unadulterated opinions on the market, I think is really special. So hopefully you guys enjoy. I'm going to kick it off. I'm going to have everybody introduce themselves, starting with Cannon.
Good morning. My name is Cannon Camp with JLL, and I am the office market expert today on the panel.
Drew Kyle with Institutional Property Advisors, broker the sale of multifamily throughout the state of Texas.
Reed Getz with Hillwood Properties. I lead our industrial platform in Alliance, Texas, and glad to be back.
Good morning, everybody. Scott Bennett with the Beck Group. We are an architecture and construction company here in Fort Worth.
And good morning. I'm Mark Massenter. I'm with Open Realty Advisors in Dallas, Texas, and I also have a development business called Ignite Realty Partners.
Thanks, guys. I'm going to kick it off with the first question. We'll start with you, Mark. But in your field of interest or in your asset class, what do you think is the most exciting project occurring in DFW today, and why? And if it's in Fort Worth, that's a bonus.
Well, actually, I would say I get a lot of choice, a lot of opportunities, right? So, first of all, we're all very fortunate to be in Texas, right? And DFW in particular. So retail in general, and then in the consumer space, and I'm talking about retail and restaurants, food and beverage, entertainment, it's pretty incredible. Great concepts, whether you're a retailer or a restaurateur, are doing amazing. And there's more demand than supply for quality real estate. If I was starting in Dallas and then coming to Fort Worth, I would say there are several mixed-use projects in Dallas that I think are super compelling. And some of them don't have to do with retail, but will impact retail. So what's happening with the Goldman Sachs headquarters down by Victory, I think, is going to have a major impact on the DFW economy. I would say from a district standpoint, I think the Knox-Henderson district is going to have a major impact in the Dallas area, both office, residential, retail. What's happening there is pretty special. And if you go all the way north, there's been this new gravitational pull to where the new PGA headquarters is, and I think that is going to be a very important driver in our economy. Plano still is on fire. Collin County is one of the fastest growing counties in the United States. And then if I was to give you some props, Jess, I think that what y'all have done in and around the stockyards is truly changed the trajectory in so many ways for this city, and you guys have done some really amazing stuff. I think, you know, downtown Sundance Square still has a, you know, very important, continues to have a lot of impact. I think what's happening in Clear Fork is going to really have a major impact in this community. And, you know, on University and the development that's continued to happen there and the type of brands that are coming on this street, it's fantastic. I would just say it's great to be in DFW, and we should all be, you know, we're all very lucky to be here.
Agreed. Scott?
Good overview. That was good. I'm going to focus on just the Fort Worth part of it because we have so much incredible stuff going on right here. As you mentioned, from Stockyards, downtown, west in the Cultural District, southeast Fort Worth Inc., Magnolia, West Main. There's some I'm not naming, Clear Fork. I mean, there's just incredible projects happening everywhere right now. You know, for us, what's been really important is the private market has been a little bit slower, has been the institutional market. So the healthcare work, you know, work with TCU has been a huge blessing for us. So we're hot all over the place right now. We just need to keep it going.
Well, from an industrial perspective, you know, there's kind of to echo, there's a lot of different projects going on in DFW, and kind of for the first shameless plug opportunity. You know, Alliance, Texas as a project is a pretty exciting
What's
one.
that?
What is that? Well, it's 27,000
Tell us, Reed.
acres, over 50 million square feet developed. No, but the industrial sector is in a pretty you know, remarkable stage in its evolution, and DFW is, you know, the number 2 largest market in the country, and you know, 7 years ago it was number 7 and 8. So our presence in the global supply chain and in the way that goods are moved throughout the country, I mean, we're at the top. And so with that, you've got a number of different projects, whether it's e-commerce, fulfillment, automation, that's happening within those facilities. You're seeing it across the board. So specifically, you know, we launched a 1 million square foot building across the intermodal facility and expanded it mid-construction for a company called Southwire. And, you know, that's a business that they lay electrical cabling and transmission cabling, and, you know, they're in probably 2/3 of the homes in the country. So big baseline growth businesses. You know, down in South Fort Worth, the you know, Carter East project is a fantastic project, over 7 million square feet at full build out. A lot of big wins there that we'll talk about in a minute. And then as you look kind of over to the southeast of the Metroplex, an indication of what a user can do in terms of applying the technology and the advancement of innovation that's happening within logistics facilities today is Walmart, self-developing over 2 million square feet of 120-foot tall, fully automated racking systems, over $800 million investment. So there's a lot of notable things happening in DFW in the logistics space, a significant amount of that happening on the west side.
I think for me, looking at it macro, I mean, Mark, I think you touched on it. It's in our world, multifamily, and probably in all of our worlds, we're in the best market we could be anywhere in the country. I mean, since pre-pandemic, we've added 552,000 jobs. Atlanta's number 2 at 200,000. New York's negative, San Francisco, Chicago, and DC are 0. So, you know, we're just blessed to be here. You know, the Goldman's a big one, I think, for just, you know, putting us on the map as a metro. You know, I think on the multi side, you know, you've got projects like the George and Clear Fork that have set a new high water mark in rents and continue to do very well. But, you know, if I was to point to one that gets me excited, it's our first high-rise that's downtown, the Southern Land Project that's coming online. And those guys are smart, patient capital. So, I mean, they did it right. They're going to lease it up right. We've got a lot of calls over the years of people saying, hey, you know, could a high-rise work in Fort Worth? And my response has always been absolutely, just not like 6 at one time. So it's good to get that first one going, you know, to set a, you know, a new level for what we can deliver here. And then just around the town, just filling in some of these gaps. We were talking earlier about, the Camp Bowie corridor and some of the new stuff that's popped up there with Hudson House and the Crescent and Bowie House. So I mean, just a lot of great things happening in pockets throughout.
Yeah, and I think from, an office perspective, I'm glad we're doing the panel this way this year because I think office has never really been more reliant on retail and multifamily to have success. And so, the stuff that gets me excited is all the new mixed use. And, people can office in a lot of different places, but if they can walk to restaurants or if they can have their employees live above the office or adjacent to the office and make it easy, it's just better for that company and that tenant. So, downtown's got a ton of good things going on with A&M, kind of kicking off the south side of downtown and redeveloping that. Convention center is all great. And then as you go west, redeveloping the cultural district, I think that has an opportunity to kind of be our uptown. And as you continue to go west into Clear Fork, there's a huge investment that's been made there, and there's only more land and more development to come. So I think there's a lot of really exciting things as you get downtown and continue to go west, I think.
So Howard mentioned that we were all wrong last year. But we've all been on a whiplash probably since March-ish of 2022 between interest rates rising, now projected Fed cuts. Is there going to be a recession, not a recession? Did we already have a recession? I mean, I don't really know. What do you guys predict for your asset classes in 2024, not only in DFW, but also compared to the rest of the country?
Sure. Yeah. I'm never wrong. No, I've been wrong a lot. Well, I'll start with DFW, and as I mentioned before, just the demand by great brands here is phenomenal, and we track sales, we track revenue, and I would say in general, very steady growth, and it's been constant. And I would say, and it's going to be that way around the country. There's a big difference. You mentioned the negative growth in New York City. You can talk about the negative growth in San Francisco and a few other cities. And oh, by the way, those that are in government here, I heard a big introduction of many governance matters. So you're doing a great job in this city. It's important. You're seeing no demand. I mean, we used to work together. You know what it's like with these brands that we advise. Some of these cities that I just mentioned and many others shut down. I mean, people don't even bring up the word Portland, Oregon. Don't even bring up the word San Francisco downtown. They were the coolest. And they were the most important places. I mean, it's the value, the billions of dollars in real estate value that's been lost in those cities. Downtown LA is mind-boggling. It's the exact opposite here, thank God. We live in somewhere between the 8th and 10th largest economy in the world, Texas. Thank God. So I would say the demand in this market is unbelievable. Now, when you talk about capital markets, because I play on both sides, it's been tough. All of us who try to finance things, build things, it's been tough. We're seeing finally the light at the end of the tunnel on a few development deals. We're in the market for a development deal that's now finished, and we're getting refinanced and permanent financed, and we're starting to see rates come down. So I would say mixed use, because you mentioned it, with retail being a major driver and residential, office, et cetera, being the receptors of that value, is a class that's really being looked at very carefully. And I would say the lenders and the investors that are focused on that space are really focused on who are the operators and can they execute. So I'm bullish about Texas, that's for sure.
You want to go to the other markets and do construction last, or you want me to? So for design and construction, it's been interesting. It's been very, very busy, but it's been a lot harder to do the same amount of work, it seems like, pre-COVID. And a lot of that is just the tightening of money. The budgets are very, very critical. That begins in design. And so there's just been an incredible focus on trying to get things in budget so they can work. And so it's just taken a lot more effort to do that. Activity, if you look at the American Institute of Architects billing index, the activity is really, really high. But the billing increases are not, which shows that we're churning, we're trying to figure stuff out. So a lot of what we're focused on is really providing very accurate information, looking at the numbers, getting good sub-feedback. Designing to a budget is a critical point. You can't just come in and force it into a box. Easier to do it before than it is now. That thought on hitting that target really has to start from the very beginning. And so, for us, the institutional markets, again, have been really, really strong. The private market has been a little bit slower, but we're still pushing there. There's a lot of great projects in the works. Just the funding happens a little bit differently. But really the focus for us is just on accuracy from the very beginning to the end, or else you're going to lose your deal.
So, one of the things we want to do to move away from the presentation was to kind of like stop looking at that scoreboard and how bad we are as true experts in predictions. I think that as we really look forward to this coming year in the logistics space, we're going to see a few dynamics that are short-lived, meaning we're coming off of historically high construction levels. So, last year we had something like, depending on what report you read, 80 million square feet under construction. And, 10-year average is 32 to 33 million square feet. So historically high numbers, that's delivering. We had 65 million square feet deliver this past year. We've got 35 million square feet under construction right now. So it's starting to come down. It's down about 50%. We're going to walk into a dynamic for the first 9 months to kind of 2024 of having an oversupply in very select areas in DFW. That's not across the board. That's very market specific, very size specific, but it's going to be short-lived because on the demand side, while we saw run-ups of 40 million square feet and in 21, 22 coming down to 35, we ended last year at 30 million square feet net absorption in DFW. Historical average of that is 21 to 23 million square feet. So that's a very, very solid year in kind of a recessionary period. And I think it speaks to the fundamentals and change that are happening in the logistics manufacturing space. We here in DFW, it is number 2 in the country in terms of size. It's number 1 in absorption last year compared to the rest of the country. It's still number 1 in construction, but it's coming down. The most interesting thing as you look forward is that what were construction starts in the last quarter of 23, and it was right around 2.5 million square feet. That's down 80% from the quarter before. So because of a lot of influence, mostly capital driven, some cost related, you're going to have this constrained supply that's going to show up, I think, really in terms of numbers and statistics, probably in 18 months. But if you're in the right location, and I think that what we've gone through is massive capital expansion, let's go grab a site, let's go build an industrial building, and hey, we're in the game. A lot of outskirt development. What we have seen, and within our team, we pay a lot to the attention to what the customers are looking for. We spend a lot of time in the logistics space, what's happening now and what's happening ahead and what are they thinking about. It's back to the basics in terms of what matters. So logistics cost, labor costs are 1A and 1B of how site selection is made. Real estate costs are 5 to 6% of that. And so are you in the right location? Do you have flexibility to access both global and domestic supply chains? And I think those areas are going to really succeed in terms of being able to fill space and grow rents. And to me, though, that's the opportunity ahead, because as you see a supply-constrained market at, I think, again, 18 months, you're going to have some pretty drastic rental growth. What we don't want to happen, though, is for, Fort Worth and everything on the west side of the Metroplex to lose out on growth opportunities. So you're seeing a lot of developers like ourselves spend time on entitlements and really designing, and we're designing over 2.5 million feet of kind of our next delivery cycle once we kind of fix the math equation, because the fundamentals are incredibly strong. From a population standpoint, I've said this before, that's the golden goose of economic growth opportunity and we're experiencing here. And when you're a logistics provider or manufacturing company, we're in both a consumer market, like you get your product here, and you're in the center of the country and you can access the entire country. Because we've got the world's leading infrastructure in the intermodal and DFW Airport and Alliance Airport and UP Intermodal. And so that's going to help us continue to drive these demand fundamentals, even in a time of maybe some economic question through the year. So there's a lot to like there.
Yeah, I agree. So 2023 was, well, I think, an interesting year for everybody. For us, transaction volume, we really saw it slow down quite a bit. We were down probably 30%. So number of deals that we did last year, about 30%. The interesting thing is revenue per deal was actually up about 50%. And so, what that tells me is that tenants are maybe being a little more methodical about the decisions they're making, but they're more meaningful decisions. Whereas 2-3 years ago in the office world, we were doing so many short-term Band-Aid deals to deal with the uncertainty. And I feel like tenants now are refocusing, and they're starting to understand their return to office program. They're starting to figure out, Tuesday to Thursday is probably the new in-office work week. And so they're starting to plan around that and make some meaningful real estate decisions. So I think that's great. And Reed, I think you hit it on the head. Our infrastructure and the fundamentals are really solid. And, Fort Worth's a small office market. We're about 45 million square feet, Tarrant County wide. Compared to Dallas, greater Dallas is about 215 million square feet. So corporate footprints here tend to be smaller. So those return to office and maybe subleasing space in their kind of policies generally don't impact us in Fort Worth as much as they do in somewhere like Dallas or the coast. Obviously a different story. But I'm very bullish on Fort Worth. I think the deal cycle, kind of as alluded to, has gotten a lot longer. And there's deals that, especially big deals, it's not uncommon for them to take 12 to 18 months to get a lease signed, whereas 6 to 8 months pre-COVID was pretty easy and achievable. So I don't know if you guys are seeing that in y'all's world or not.
Yeah, I think last year was a big transition year, I think, for multifamily demand. If you look on our side, right, there's capital markets and there's the demand for people renting the units. Last year we saw rents were about flat. Absorption, if you look nationally and locally, household formation was just down last year. In DFW, we created about 15,000 households. It was a really light year, and about 2/3 of that was in about the back third of the year. So it was kind of heavily weighted towards the end. I think a lot of that was economically driven. Rents had gone up so quickly. A lot of threat of recession, people getting concerned about things like that. So you had people doubling up, not stepping out, and maybe creating that new household. So last year, while we had a good amount of supply hitting the ground across the country and in DFW, in fact, I think more than a lot of the third parties reflect, you had a lot of supply and a little below average absorption. So our vacancy ticked up, where we had been running 96% occupancy in DFW, we're down right about 92.6 right now. We think that's bottomed. I think the other factor you had that's kind of below the radar is, during COVID, you had, moratoriums on evictions. You had a lot of rent relief programs people could sign up for. Last year, there was a lot of people that were still trying to take advantage of that system, I'd say, especially down spectrum in the workforce housing. And, we're just staying in there. And the judges were slow to give the eviction and get the people out. And that created, 3 to 5% shadow vacancy. And the more down the spectrum you're talking, the more that existed. And last year was a lot of cleanup of that. So when your occupancy is really only 89 or 90%, you're not raising rents as fast either. So that lower spectrum product brought down rent growth. In the Class A space, we've continued to have good positive rent growth. And we were basically break even at 0 last year. And that was probably, 2% on renewals and, a minus 1 or 2% on new leases. This year, we're actually projecting positive rent growth of about 3%, even though we do still have a lot of pipeline coming. In our opinion, and we're tearing that data apart, a lot of that pipeline, some of that pipeline is already delivered. And so we actually think last year was more the peak. Maybe we're at the peak right now. So we think occupancies are probably hovering in that area. Like I said, we're seeing good positive trajectory in household formation. And the big thing, and similar to industrial, our starts in the second quarter last year were down 70% multifamily in DFW. I think through the third quarter stats, they were down about 57%. They'll fall more. It's almost impossible to get a new project capitalized right now. Debt, cost, you name it. Values are down 20 to 30% from the peak. So your cost now is maybe at the value of a building that just traded. Well, that doesn't work in the model. And so the positive thing is, one, we're in Dallas-Fort Worth. Our supply issues are way better than a lot of other markets. I mean, we've got 6 to 7% of our stock under construction right now. You look at Austin, Nashville, the Carolinas, it's 15% of stock under construction. We had 150,000 jobs last year. We're projecting another 152 this year. So a lot of positive momentum. We think certainly in the A and B space, values have bottomed. In the C space, there's probably a little bit more washout. You did have a lot of kind of less sophisticated operators in that airspace that are going to have some challenges this year. And that probably causes a little bit more risk to values. But we think rents are bottoming. And when we hit 25, 26, and that's what investors are looking at going, holy cow, I'm buying at a great basis right now, and I got to own some stuff when we hit this rebound because there's not going to be any supply. So the optimism is kicking in. I think it's going to be a good linear growth year as we move through the year.
And there's a lot of parallels in terms of the supply and demand dynamics between industrial and multifamily here locally. When you look at the fundamentals that drive the industrial space, and you think about, okay, population is a big part of it, and as you go through some of the statistics on just population growth, perspective helps you make long-term decisions in moments of kind of short-term challenge, and really test your conviction and try to be that first mover, like we have tried to be over the past several decades, here in Fort Worth. You look at Texas, and from 2000 to 2022, the state grew from 20 million people to 30 million people. That's a 50% growth. DFW went from a little over 4 million people to 8 million people. I mean, that's almost double. And Tarrant County moved from, call it 1.5 to a little over 2 million, so a 50% growth. So you think about where people have moved to and then where they're going to continue to move to, it's going to be west side of DFW. And so that drives demand, certainly in the industrial space. And then you layer on these long-term trends of same-day demands, from delivery demands to your door, like everybody is here in the room. I mean, for those of you who order online, when you get the option for free to say, yeah, I'll wait 2 days to save packaging, how many actually do that? Raise your hand and be honest. Exactly. So you want it today, and that's not gonna change, and that requires a complete rebuild of the supply chain infrastructure and manufacturing network, layered on what a lot of these companies have learned about global supply chains. I mean, just in time is very cost effective, but it is not reliable. It is not resilient. So you throw in a pandemic, you throw in a war in Europe, and you throw in some of the challenges over in the Red Sea and what's happening, and people look at, okay, how am I going to get goods to market? And so that's pushing manufacturing here. That's a big win for the United States, big win for Texas, low cost, no income tax, can do business regulatory environment. Those are all kind of green check marks in this really kind of opportunistic wave that we're in. It won't last forever, but all those things really say, okay, long-term, this feels like a good bet in a short-term challenge market.
I'm going to go off script a little because I think there's a lot of different ways we could take this. But what Mark was talking about with kind of the change in dynamics from retailers in terms of thinking about, I used to want to be in LA or do my 5th store in LA before I do my 2nd store in Dallas. Or there's a ton of different parallels, and a lot of it has to do with, I think, the political environment, pro-business. I'm curious, Cannon, if you think that same thing may happen for Fort Worth in terms of office demand. And I mean more from it's easier, this is my perception, I'm not trying to start an argument. It's easier in Fort Worth to say we're a 5-day-a-week in office or a 3-day-a-week in office than it is in Portland, New York, LA, et cetera. And I'm curious if there's any discussions internally for you guys that, is there potential that we could see an influx of businesses wanting to move here because it's easier for me to predict the psychographic of my employee and therefore my demand for my office and space planning and all the things that go into it. So I'm curious if you think that possibly could happen for us because of the positive environment that's here for businesses.
Yeah, absolutely, I do. I mean, I think that when you talk about return to office trends, Fort Worth has really not fit the national narrative. I mean, I think that we've all been back in the office since probably May or June of 2020, 5 days a week for the most part, and a lot of companies came back really quick. So I think Fort Worth continues to buck the national trends, and in return to office is really hard to track because a lot of companies, that's information they don't necessarily want to publish. They don't want to, tell the world they're having this internal struggle to get their employees to come back to work in the office, and so it's hard data to track. But I think if you just talk to people in Fort Worth, you'll realize that we're different than the East Coast, the West Coast, and a lot of other markets. Chicago is one, and that's not different. Austin's kind of the same way. They've done a really good job of pushing people back. Houston's done a good job. San Antonio, same. So, and Dallas. So I mean, Texas, I feel like is different. Fort Worth has probably been more back than most companies. I think the city is really focused on incentives right now and how do we lure some of these headquarters and headquarter relocations. Unfortunately, with kind of macroeconomic trends, headquarter relocations have really slowed down, and so we're just not seeing the number that we used to. But it will pick back up. And Texas, by far the biggest winner in the country for landing headquarter relocations. And so I think there were like over 500 headquarter relocations in the last 6 or 7 years. Texas landed like 150 of them. So we win the headquarter relocation battle a lot. It's just a matter of time before that kind of picks back up. But I think incentives is great. Affordable housing is key. Good schools, school districts. And so we've got a lot of that going for us, especially as you move north in Tarrant County through the Alliance Corridor into Westlake, South Lake. There's a lot of land. Alliance has Circle T Ranch, which has some really phenomenal sites, and they've got great renderings and plans, master plans on how to build these headquarters and where they're going to be located. And so if you guys ever have a chance to go to the Circle T, I would recommend you don't pass up on that invitation. It's really impressive, and it's what, 8 minutes from the airport, Reed? That's right. And so
I did not prep him for that, by the way.
And so,
I
yeah.
will buy you a beer though later this
thank
evening.
you. But you start to checking some of those boxes when it comes to schools and affordable housing and executive housing as well. So all that's kind of part of the equation, but I think Fort Worth is really positioned well to capitalize on that.
Can I add something to that?
Yeah, go ahead.
I think the momentum that we have in Fort Worth, I think some of the changes that have been made at the chamber, credit to Mike Berry stepping in and helping to drive some of that, is massive. If you think about Austin, and it's so funny, you talk to apartment managers in Austin, and like a third of the residents have moved to Austin with no job. They just moved to Austin. And they're walking in the door going, hey, I just moved here. And they're like, oh, great, where do you work? They're like, I don't have a job yet. And it's no joke. It's a meaningful amount of people. I think Austin has challenges. Traffic, cost of living, the delta from owning a home to renting in DFW is $1,900 right now on a monthly basis. That's up from about 1,000 pretty consistently if you go back about 3 years. And it was running kind of 800 to 900 to 1,000 for years. $1,900. Austin's $2,600 is the delta to own a home to rent. And rents are high in Austin, so think how much the home value is. So I think that's an advantage for us. You look at, the future development, redevelopment of the Audubon dealership area. The stuff happened on West 7th with Goldenrod that we talked about. Clear Fork, Alliance, the stuff along Camp Bowie. The vibe that we have that we've got to do a better job branding is what's going to bring employment here. And some of that is because people just want to come live here. Dude, this is the best place to live in the state of Texas. Like, we've got the culture. I don't need to live in Austin to be cool. Like, there's so much positive here. I know the chamber's pivoting to brand that a lot better. That's going to bring the people here. The people here are going to bring the companies here. And then you look at like the TCU Medical School that's going to be able to get more cohesion with all the hospitals to bring more medical research. The Texas A&M campus is huge. So there's tons of momentum here. To me, that's what's going to bring the jobs and the big brand is the more we push that out there and people go, man, I just want to have my company here because it's a great place to live and there's a bunch of great people to live there.
I think also, just to emphasize the point of what's happening in different markets, I love Austin, spent 4 great years there, and thankful I got let in the door here as a Longhorn, which, again, thank you, TCU, for hosting us here. This is fantastic.
We'll be hazing you
I
later.
grew up here in Fort Worth. I love TCU, too. As much positive growth as we have in fundamentals, we've got to remind ourselves, and thankfully we have the leadership here in Fort Worth and with all of our local public partners and staff, that complacency puts you in a position that maybe Austin is, which is very difficult to develop, very bureaucratic, long timelines. That's a California dynamic. And so making sure that we're not complacent with this growth, that we have this wide open net of, okay, we've got great population. Let's not become complacent. Let's stay efficient. Let's stay, pro-business. And again, we've got fantastic leadership here. We're very, very fortunate for that because we've seen what happens when it gets out. You get out of focus there. And so that's important.
I think what's also interesting is because we, in our business, we're doing stuff all over the continent, really, and you guys have to be you really should be proud of what's happening in Fort Worth, and what's happening in DFW. When we're in Charlotte, we're in Raleigh, we're in Nashville, we're in a lot of markets where people say it's cool. Fort Worth has really evolved into a very special city. The Metroplex has really evolved, and part of it's, I would say when you're talking about office, psychographics matter, and that's why people want to come down here and relocate. This is why Goldman's doing what they're doing. This is why Fortress did what they did, and so many people in the capital markets world, and this is a great place to retain and recruit. What's super interesting, I think one of the things that just needs to be emphasized about Dallas and Fort Worth is the cities have become culturally significant. And that cultural significance is what's driving a lot of growth. Whereas, living in Dallas, and I'm from Atlanta, I used to think Dallas was just very commercially good but didn't have a soul. Dallas and Fort Worth now have a soul. And that's what's driving business here. That's what's, that's why a lot of people want to stay here. So, and that's why governance matters. So.
I love that. I think that's hard for us to put into words or, in terms of stats and data, because you say, why do you pick Fort Worth or Dallas? And I want to live there. But it goes to a lot of the kind of soft factors that are kind of coming into play. I don't know how much time we have left. Whoever's supposed to be keeping track of that, I have no idea. But wanted to circle back to a point that Reed made on how e-commerce and just the trends of the consumer have really changed the way that industrial demand and supply is being forecasted. And circle back to Mark on how do you see that continuing to impact retail? When we saw it in crazy numbers for industrial and retail in 2020 just because of COVID. But how do you continue to see that impacting both of your asset classes? And you want to start with
Yeah,
Reed and
sure.
Mark?
So 2020, 21, 22 were remarkable years from just a, industrial logistics standpoint. And obviously there was a lot of challenges, throughout the world. But if you just look at the numbers, I mean, it accelerated trends of 5 years, kind of condensing into 18 months. And, e-commerce sales were growing at year over year, 30 and 40% at the end of 2020 and into 21. Where that is now, it's year over year, 6 to 7%. So still very much growing, but at a much more normalized rate. And this is e-commerce U.S. sales. It's 15% of total retail sales, e-commerce sales are. You look back 15 years ago. So we kind of think about 2012 as that was when we did our first Amazon fulfillment center build-a-suit here in Alliance, as kind of the precipice of really just e-commerce infrastructure rebuild. It was like 6% of retail sales or so. There's projections for it to continue to grow, I think, and that's obviously going to continue to drive demand. But as at the moment right now, the Fortune 100s are kind of taking that breath of, okay, we have expanded our portfolios, manage inventory, supply chain optimization. Can we utilize retail stores? Do we have the right demand growth? And that's a Fortune 100. Some of that is because maybe they overshot, 50% maybe overshot, but the other 50% is the automation and the volume utilization of these facilities, because there's so much happening in these industrial buildings. It's not just racking and storage. I mean, there is automation, fulfillment. There's highly automated conveyor and sortation facilities that investment values that are 3 to 4 to 5 times the buildings themselves. So it's unbelievable what's happening in these. A lot of utilization is having older facilities kind of say, all right, we don't need that one. We're going to go move into the more modern facility that has higher clear heights and power. And so e-commerce will very much continue to drive demand. But again, here we're also seeing manufacturing. 30 to 40% of demand this past year, and kind of current look forward demand is expected to have some manufacturing component to it for all the reasons that are happening around the world. And so it's when you read about e-commerce demand going down, yes, that's happening, but overall industrial logistics demand there's a lot of different components to that now. But I don't think that's going to change because, again, I mean, a lot of these folks here are not going to accept their packages any later than today or tomorrow. So that's also good.
I am tired of cutting up the boxes to put in my recycle bin, though. So.
Okay, that's a business idea, right?
Yeah. So I'm sure people remember several years ago hearing retail's dead, and I laughed because I never thought it was going to die, but a lot of people predicted it. And a lot of great new businesses came on, companies like Warby Parker. I don't know if any of you know that brand, or a company called Everlane. And I can name many, many more digitally native businesses that said they will never open a physical store. And I thought at the time, and I'm not trying to say I'm right, but that was the dumbest idea I'd ever heard. And we had lots of conversations with these brands because we were fortunate enough to be with them early and say, that's stupid. So, as you said.
Different way.
Sometimes. As you said, I would say between 15 and 20% of all sales driven by great retail brands is internet, direct consumer. The rest is primarily physical stores. The physical store today is more important than ever because these brands that are trying to get out there, the best way to engage with a customer is getting them in their store. So brands may not be opening as many stores as they used to, But when they do, it's a very purposeful decision. So they're building more beautiful stores. They're more focused really on being in the right locations. And it's the best customer acquisition tool out there is a great store. You can't acquire customers online cheaply. It's the most expensive way to acquire customers. Think about all the advertising all these retailers do on Amazon or Google, et cetera. It is not cost efficient. So it's better for them to invest in a store. The return on investment is much quicker. The physical store, as far as I can see, is here to stay. So retail is really important. Retail real estate is really important.
I'm going to follow up with two more questions, and I think we'll close out after that because I think I didn't really watch today. What submarkets in Fort Worth are you guys most excited about, and what are you slightly keeping a watchful eye on? I'm going to start, Cannon.
Sure. You know, kind of like we said earlier, I think downtown and going west is extremely exciting, and you know, there's a dozen projects that are in the pipeline that we would love to see get built, and I think they will. And it starts with A&M, who's under construction, the convention center, moving down 7th Street with the Goldenrod projects. I think both of those offer, you know, different opportunities. And then as you go west into Clear Fork, there's a lot of really exciting stuff happening behind the scenes. And so that's probably the market that I've kind of got my eye on. I'm the most excited about. As far as something I'm concerned about, it's kind of the other direction. It's going east into the mid-cities, Airport Freeway. East Fort Worth doesn't have a lot of office product, but those are buildings. The ones that are there, I think, are going to start feeling some real pain. You know, the office market continues to really bifurcate, and the top of the market is doing great, and the BC product is holding in there, and it's doing better here than it is in a lot of parts of the world or the country. But I think this year it will start to feel some pain. You've got lease roll starting to happen. Corporate America is not renewing leases in those types of buildings. And I'm talking about buildings that were built, you know, the 80s or before, that are not in a walkable environment. They don't have really any amenities. You know, that's the space that I think is in the most trouble. The good news is, I think 50% of the vacancy in the U.S. is really isolated into 10% of the product. And so it's a small segment of the market, but it's that type of product. And so I think, you know, we've got about $150 billion in loans coming due this year. And I think, you know, the ones that are in that BC product are really going to struggle. I don't know that we're at the point where we've seen a lot of residential conversions, and that kind of, if it's well located BC product, we'll continue to see kind of residential conversions or hotel conversions. But if it's not well located, then I think you're in real trouble. You know, some of the stuff along Airport Freeway in years to come, you know, maybe turns industrial. Reed will probably talk more about that, but you know, you look at buildings that have tons of parking on big land sites, and if it doesn't have any amenities and it's not walkable, that's probably not going to be an office forever. So I don't know if Reed, you want to hit on that a little bit.
Well, yeah, just from a distressed kind of submarket industrial view, there's not necessarily one to point to. I mean, there will be a couple with maybe some oversupply temporarily, but again, that's short-term lived, and we haven't seen any, you know, really wholesale, you know, deep discounted assets in the industrial class. I think kind of for all the reasons. Not to say that won't happen in specific areas or maybe specific properties, but as you look at just what's happening, if the last time, so we talked about deliveries that are coming down and starts that are you know, a fraction of what they were. The last time that DFW market really didn't deliver any product was right around 2009. Since then, there's been over 380 million square feet built, and that equates to 15,000 acres of industrial logistics manufacturing development. So land scarcity is very much of a dynamic here in DFW in the right markets. And so that's leading, you know, redevelopment opportunities for suburban offices that have a lot of land, have a lot of parking. You know, we've evaluated several deals. You read about a couple kind of in that Irving, DFW airport market, to where you go buy those assets and you redevelop an industrial. They're hard because you've got zoning, and if they're master planned areas that weren't necessarily with that, you've got a lot of title things to work through. But repurposing, I mean, we are in that type of environment now, and true infill repurposing, redevelopment is absolutely happening in industrial. So I guess that'd be kind of that's about as distressed as we've really seen right now. But just in terms of submarkets specifically, so in Fort Worth, you start down south, and South Fort Worth, which is about the 11th largest submarket in DFW, it has done remarkably well. Like last year, it was number 3 in total absorption in all of DFW, and it has really outpunched its weight class for all the reasons of transportation and labor and the folks at the Carter East development down there with Rob and Crow and Clarion and Stream. Seen a few of you here. I mean, that's over 7 million feet, and have done some pretty amazing deals with Siemens that you read about, DrinkPack, which also did another 1 million feet up in Alliance. The thing about that market, though, is that it's pretty land constrained, and it's almost completely developed out. So you have to go further south. As you move over to the west, a lot of big things to look for with Walsh and Veal in terms of just future growth and really where the industrial logistics market's going to go. Obviously, there's been a few big manufacturing deals that have been read about in the paper that we're trying to get out there as just a community, and I think there's a lot to like. Walmart closed on some acreage out west. So there's a conviction out there as population continues to grow. So that's an exciting kind of future growth area. And then shameless plug number 2 is Alliance and everything that we're doing here in Alliance.
That shameless plug number like 7.
Is it? Well, I'm just talking about the market, right? There's others that are developing up there too. Alliance was number 1 in absorption last year in DFW, and over 6.5 million square feet, and continues to be the bellwether for DFW. And 35 years ago, that was an inventory and market that was 0, and if you look at the CoStar numbers, it's the largest in DFW at over 85 million square feet. There's still over 30 million square feet to develop, at least within our land holdings at Hillwood, and so that's a huge growth area. We were able to get within Alliance. DrinkPack did their 1.2 million square foot bottling plant. Southwire I mentioned was 1.2 million square feet. We finished the MP Materials rare earth kind of magnet manufacturing plant. So there's a lot of things happening there. One of the other things that we're focused on is, again, what's the future of logistics? What's the future of automation investment? It's going to be driven by power. You can't automate buildings without significant power, much in the way that data centers are, and the future of mobility. So autonomous trucking, short haul, long haul is kind of starting to, and you've read about in the Wall Street Journal, long haul trucking from an electrification automation standpoint might be a little ways out there, but the short haul, going from intermodal to facilities, is very much a focus and an opportunity that we are on. So building out smart infrastructure for that next generation of facilities and whatever it may be. And so those are really, I think, kind of the most exciting areas in Fort Worth.
Yeah, I'd say for us, I don't think as much about maybe a submarket. I might bifurcate it more, A versus C, frankly. I think in town Fort Worth, though, we are very bullish on that. One of the things that happened in our world, you had about 6,000 units get delivered in the core of Fort Worth from 2018 to 2021. It all got absorbed fine. The sales velocity was so high in 21 and 22 that, all those buildings traded. I mean, I think we handled like 24 sales in just like in town Fort Worth in a 2-year period. And every time that happens, it's a new owner. It's usually a new management company. They switch, how they run it to a revenue management software, and it just created a lot of volatility last year. With that much turnover and ownership, a lot of people that move into the building, most of them stay, but then they move around a little bit. So it was kind of flat last year. We expect that to improve. There's just fundamentally no supply right now. North Fort Worth had a handful of deals get built. They're all on they're basically stable at this point. So the Class A space is set up to do well. The B space, you can't go back and create 90s and 2000s housing, for city employees and teachers and what have you. So that's always going to be a good, stable place. That C space scares me a little bit from a position of, like I said, ownership. You had less sophisticated owners. You had more bad debt. You had a lot of, higher leverage, floating rate loans that are, people having to raise money to rebuy their rate caps. And, that smaller investor pool is not putting up the money to rebuy the rate cap. So a lot of these buildings are a little undercapitalized right now. Their occupancies are down. You could have some foreclosures. And it's just going to take a couple, 3 years to work through. But again, you can't go back and create workforce housing. So long term, those buildings are going to do great. They've always been a leader in rent growth because the demand. But that's kind of a sector you got to watch a little bit, and it'll just get turned through. But the stuff you kind of see in the core of Fort Worth is going to do very well.
So Fort Worth and Tarrant County are my submarket, and I hope you don't forget your amazing quote about you don't have to move to Austin to be cool. Robert, that's a good one. You don't. We have incredible stuff happening here, and we have stuff going on in every submarket. There is an incredible move to quality. I've heard that a couple of times where, yes, there may be an excess of supply in something, but people are always going to move to a better product with a better experience, like Cannon was talking about. That's some of what we've seen in the cultural district, is just creating incredible spaces that will continue to define the city. I'm really excited about some of the big projects that we have coming on at Beck, because they're going to redefine certain areas, like we were selected as the architect for the New Main Hospital for JPS. And that's going to completely transform along with the other projects. We're about to start construction on a 2,300 car garage right on Magnolia and Main, just to the west. I mean, these are transformative projects downtown. I mean, there's things happening everywhere. What we need to be focused on is, like I said earlier, making sure as designers and architects that we're looking at the right numbers, we're estimating, we're providing accurate data throughout the design process when it's very conceptual all the way through, because the certainty and the accuracy of this information is what's going to help us get stuff done. And so we're really focused at that. We're investing a lot in the technology side, the data analytics side, but also the relationships, because nothing happens here without relationships. And it's one of the things we're known for in Fort Worth is the relationships.
And please design cool stuff. It matters. So I would say in Tarrant County, I think the South Lake area it's mind-blowing in how dynamic that market's
We forget
become.
about South Lake.
What's that?
We forget about South
I
Lake.
know. I
It's
was
in
feeling
Tarrant
sorry
County.
for South Lake. I was like, "Where's the love for South Lake around here?" So I'm going to give it some props. So it is. I mean, if you look back 15 years ago and what South Lake was, it was suburban,
Yeah, tertiary.
tertiary.
Sorry,
And
South
if you
Lake.
looked at the revenue of the restaurants and retail, you go, good. Good brands, good sales, nothing phenomenal.
Yeah.
Now, if you look at it across the board in that submarket, the demand is really high, the revenues are really high, rents are really high. People want to live there. It's a great in-between market between Dallas and Fort Worth. So I would say South Lake is really exciting to me. Again, not to give you, but I have to give you props. It's amazing what you guys have done there, and I think the stockyards and what you've done is a gift to this city. I mean, if you just look at the visitation numbers.
I didn't tell him to say that.
No, but I mean, you've trained me, right? By the way, Jess and I worked together for many years, and I'm like ridiculously proud of what she's done here. So, but it is amazing how a great development can transform or be transformative for a city, and that's what you've done. I mean, the numbers, what is it, tripled in visitation?
9 million visits, more than the Eiffel Tower. I don't know if Craig is in here. I don't want to
Yeah.
steal his thunder, but
So
Brad's over there.
that, I mean, when when did my group of friends say, let's go do a staycation in Fort Worth? We come down here to have fun. I mean, it's a blast because the city has culturally just become so much better, and it's great, and just keep doing it. So I would say these stockyards, and I believe that, like, the gravity towards Clear Fork and what's happened there, the success that they've had with the developments around there, all asset classes, retail, multifamily, office. And so to me, in Tarrant County, and this is not to say I don't believe in the cultural district and I don't believe in Sunday. I believe in this entire market, but if I'm focusing on like three where I think dynamic markets that are just going to keep becoming more and more dynamic, it's those three in my mind.
Love that. And I love that we have multiple options. Like, it's pretty crazy that now we can actually talk about submarkets. Used to be Fort Worth was just Fort Worth.
Right.
And everything was jumbled together. I got one more question and then we'll close it out. Scott, wanted to talk to you a little bit about any new trends you see coming specifically to Fort Worth in terms of dynamic architecture or anything like that that you're particularly excited about.
A lot of it goes back to the quality, and it starts from the very beginning. I mean, I think as a community, our expectation and our standards of design have just continued to increase, which is absolutely fantastic. And I think we're also diversifying aesthetically, which is helping our city become more modern. And so we're seeing not only the respect for the past, but a lean into the future. And, again, I hit on it a couple of times, but I think the best thing that we can do is really be deliberate in our planning, focused on what the final outcome needs to be, not operating in a vacuum because we've got really tight margins for success right now. And to hit those, we need to be very collaborative right up front. So quality and collaboration.
Love that. And we've talked about this several times, but the relationships in Fort Worth, that it's much more of a we environment in terms of creating the success that we need for our city is pretty amazing. That starts at the city level, but I think the developer level, everyone's very collaborative. So hope to continue to see that. I have two shameless plugs. You can't get away from it. The first is for TCU. So 2 decades ago when I went here, my sister and I started the real estate club. And we did it because there were no jobs in real estate. And so we needed to find some people we go, work for. Fast forward, we now have, James talked about it, the TCU Real Estate Center, and we're hosting the real estate forecast with some of the best people in the business at this school. It's pretty phenomenal. So when we were talking about all the headwinds for Fort Worth, I want to say that I think TCU, I don't know if it's the chicken or the egg, but we are right there in it. So go Frogs. And then number two, you guys are going to hear from a really phenomenal panel right after us, really focused on big ideas. For everybody in this room, I think you're going to hear it from them. Like, we need more big ideas. We need more dynamic, y'all know dynamic ideas. I was going to try and say a different word, but it didn't come out right. So continue to be doing that in Fort Worth. And I think we have such a unique opportunity to continue to be unique that we need as many big ideas as possible. And y'all are going to hear from Craig, who we've worked with very closely in the stockyards and has been a partner of ours for over 9 years. Crawford Edwards to talk about some of the stuff that's happening in Clear Fork. Laura Bird with Frost Tower, and she's doing a ton of things in the city. Isaac Manning, Robert. So I hope you guys look forward to that and enjoyed kind of our fireside chat. Thanks.
Thank you.